Hey, what's up YouTube? Let me get my live session set up and blast this out to everyone I know so we can get this party started, guys. If you are part of my Cryptosomniac community, give me a thumbs up. All right. We'll get started just shortly here. Hey, if you're here and you see me, you can hear me fine, give me a shout out, give me a hello. What's up, everybody? All right, so let me shoot this out to everyone. Give me a shout out. All right, let's do this. Okay, so. Throw that there, there. Ton of these different groups that I'm a part of, so let's do that. Let's do that. Man, this is wrong. I did not mean to have Sam's thumbnail up, but it's pretty funny though. I'm just gonna leave it like that. Where's this one right here? TA room. It's that one right there. It's that one right there. There. All right. Okay, so blasting that out to everyone. How's everyone doing? Hope y'all are well. Let's wait another minute to see how many more people join. I know people are interested in my analysis and they had a few questions to ask me. So if you're new to my YouTube live sessions, my name is Amal and I am the head analyst of the Cryptosomniac community. I also have my own investment fund. It's called Pegasus Digital Asset Investment, Pegasus DAI. We're currently working on getting the accredited investors approved from all across the world to be invested in our fund for tokenized securities as well as all the other digital assets. My experience in the markets and in technicals is of 11 years. I've been doing this for a little while, so I think I have a decent hang on things. I entered the equity markets in 2008, right around the financial crisis time, so not the best time to enter, but I definitely, learned by being thrown in the fire. Unfortunately, the way I started was I got a hold of my dad's account and I started trading in his account and I started to make some good trades here and there, but after that it did not go so well and things went down south. And after losing a bunch of money, I kind of made it a point to start learning about trading and how to trade and technicals and reading books and learning about investing and market psychology. So in my Cryptosomniac group, I always preach being able to understand, your own emotions, your own psychology of what are things that you do wrong as a trader, where can you improve. Technicals are really, the half the battle, right? Understanding your own emotions and getting a grip on your own emotions and psychology is literally the rest of the game. Okay, and once you get a grip on both, you're going to master this market, but very few do, right? Only 98 to 99% of people will get flushed out of the market, but 1 to 2% will be the ones that take all their money, right? There's a rule in the trading world that 90% of people lose 90% of their money in less than 90 days. And that holds to be pretty true across the board. You know, everyone who comes into this field trying to become a trader and gets their account blown up, you know, whether it's crypto or equities, commodities, Forex, etc. Okay, so here we are. Let's get to the Bitcoin analysis, guys. On the 4-hour chart, I see a slight movement down on this, you know, demand zone right here. However, we're not getting a bounce out of this, but we are creating somewhat of a parallel channel, as you can see, kind of like that, right? So we're consistently moving up, but we're also not, I mean, we are creating higher lows, but we're not creating higher highs. So my guess would be that at some point this will be exhausted, and we are ultimately going to break down to this area again. But remember that you do not want demand zones like this to be tested over and over, okay? Eventually they will break. And like I pointed out in my analysis this morning, if you watch my work on TradingView, you can see that this little area right here is essentially the last point of support until we break down to 3,100. So you could see why it's critical for us to essentially use this support right here, which is, you know, 3,450 or so, and bounce off it strongly. The fact that we cannot break past this horizontal right here, which is 3,670, is a very telling story of the weakness of Bitcoin in general, okay, over the past few weeks. Now, if we stretch this into a higher time frame, you can see that this horizontal line of 3,670 stretches back way over here, where a couple of candles opened and closed back in September 2017, okay? And now you can see we are right under that area, okay? Now, this is definitely not a good sign, because it just goes to show that, you know, we have not had a weekly close in this area since way back in 2017. I mean, yes, we had it here and here, but these actually resulted in a bounce back. Now, if this becomes resistance right here, then ultimately you are going to hit this top like that and then potentially come down again. And that might create a scenario which could be forming this sort of descending triangle, as you can see, like that, right? And remember, guys, probability-wise, descending triangles have a far higher probability of breaking down, okay? I think Bulkowski, one of the more famous traders, notes it as a continuation pattern, and he denotes that in a downtrend, I think the probability is anywhere between 60 to 70% of this pattern breaking to the downside, like I mentioned, okay? So be careful in this particular, you know, pattern. It's, you know, it's not something that you want to be caught trapped in, but, you know, it's definitely not being tested just yet. But remember that, you know, 3,450 and right below that, if you are interested in, you know, spotting a quick scalp, your stop should be, you know, right around $3,400 or $3,375 at the most, okay? Because if we break down past that, chances are we're going back to $3,100, okay? So now, with that being said, I'm sure you saw some of these gold hoops around the let's see, the daily chart right here, right? And you're probably wondering, well, what exactly is that? Well, so because I come from the equity markets, right, one moving average that we often use is the 128 moving average. And as you can see right here, it's been used multiple times as support, right? 1, 2, 3, 4. And then it was also used as resistance on the bear market in 2018, which is 1, 2, 3, 4, and 5 times. The fact that we're so far overextended to the downside below this 128 moving average, given that the price is at 3,600, and we're not able to retrace and come close to it and get rejected again, it just goes to show that this particular asset, and obviously, you know, this is Bitcoin, is severely weak, and it's almost fully dominated by the bears. So this is definitely not a good sign, guys, because, you know, what we were really looking forward to was, you know, a potential head and shoulders, right? Inverse head and shoulders pattern to come reach this trend line and then finally rip through. But that didn't happen, okay? That didn't happen because, you know, the bears probably saw the pattern, or they tried to print it that way, and then price got rejected hard. Okay. You know, this, again, it spells the overall weakness of bulls in this particular region. Okay, guys? And this is not something that you want to keep, you know, this area right here of $3,600. It's not an area that you want to keep moving sideways in. Okay, because ultimately, if you keep slowly trickling and bleeding down kind of like this, you will create this descending triangle, and then you will ultimately break down. Okay, let's check out some other charts that I have mocked up. On this chart right here, I've drawn all the different little order blocks that are you know, being worked through or have been worked through. And currently, as you can see, we're working through this, you know, OB right here, which is $4,700 to $2,900. And again, if you don't know how order blocks work, please go to our TradingView channel, Cryptosomniac, and I have a, you know, nice informative explanation on there to explain how order blocks are formed, why they're formed, and what exactly their meaning is to price action. Okay, so anyway, getting back to this chart, you could see this particular OB right here is between $4,700 and about $3,000. Okay, and the fact that we're under this, you know, 50 Fibonacci level of this OB right here, right? So we're right around $3,600. Just goes to show that we're unable to pierce past this 50 and even stay above it. Okay, so you can see that this is a 3-day. Each of these candles represent 3 days, right? So that means over here we spent, you know, about 15-20 days above this 50 Fibonacci level of this OB, but then broke down again. Okay, so we're barely able to stay above it. Now, if we spend more time under this area right here, right, than we did right here, then I'm going to be fully convinced that we will potentially break down to the $3,100 low that we posted not too long ago. Okay, and this is not going to be good because, you know, this area right here, this $3,100 zone, wasn't even that strong because, as you can see, we didn't even bounce that high. We barely made it to $4,100, right? So from $3,100, all we could muster up was another $1,000, you know, barely like a 10-15% move. So it's not something that the bulls want to keep playing in this particular area. Okay, let me see if I have any questions on our Cryptosomniac channel. Hey, what's up, Hossein? How's everybody else doing? Give me a thumbs up if you're here, if you're joining for the first time. Thank you guys for watching and always being supportive. I'm sorry if this particular thumbnail of Sam, you know, talking about Constantinople is misleading of Ethereum. I'm definitely not talking about that. This is all about Bitcoin technicals and analysis. So yeah. All right. So next chart we have here, this is a Wyckoff accumulation chart that I drew up, right? And the reason I mocked this up is because, you know, on the off chance that we don't go to 3,100, well, what could be the possible movement of an accumulation series? Well, as per, you know, Richard Wyckoff, the person who's looked at, you know, decades of market data, he constructed this sort of accumulation schematic, okay? And if we were to map out the schematic as per current Bitcoin prices, this is, you know, generally how things could play out, okay? So if you want to read more about what these, you know, different acronyms mean, the LPS, last point of support, PS, preliminary support, spring test, etc., you can check out my TradingView post, Cryptosomniac, and you can go read about it. But this is definitely a possibility, guys, right? For all I know, we could move sideways here, move back up towards 4,000, retrace a bit, and then head back up again, you know, to $4,400, and then come back down, and then keep on moving up and down. And then maybe by right before, you know, the new year of 2020, we will start heading towards $5,000 or $6,000. Okay, this is essentially, you know, the length of time and the general outline of how the accumulation schematic could play out. And again, this is not exact. And if we start taking out the SC here, you know, more sooner than later, I mean, this entire schematic will be useless, okay? And that's okay. I'm okay with admitting that. It's just a possibility, right? Possibilities and probabilities is part of the trading world, okay? So you just kind of have to accept the fact that if you're wrong, you're wrong, right? Somebody asked me about Ethereum, so I was gonna kind of show this to you guys. Ethereum was, you know, a little while back. I mocked this up right around September of last year, and I said that, you know, if we broke, say, $200, more than likely we'd head towards 150. If we broke 150, more than likely we'd get to 75. Okay, so as you can see, I was just, you know, maybe $10 or $15 off from 75. But remember, you know, the game is not over yet. Okay, I fully believe that if smart money and, you know, these big hedge funds are going to come into this space, there's no way that they're going to want to pay such expensive prices, okay? They're going to want to accumulate at the cheapest prices possible. And for Ethereum, I think that area would be anywhere between, you know, $30 to $50, okay? And then they'll take this thing back up potentially to, you know, all-time highs or even beyond that, okay? Again, I don't quite know if that's going to happen exactly the way I'm kind of sketching out, but it's definitely a possibility because I've seen this in the equities world, and I know that, you know, when it comes to institutions, they want to buy as much of the remaining supply as possible, gain significant market share, and then once they're ready to push prices up higher, once they've weeded out all the weak hands and the entire market looks like it's dead, that's when they'll start pushing prices higher, okay? So, you know, I was having a conversation with someone and they told me, you know, why is it that, you know, this can't be the point of capitulation? Well, the reason being, you know, capitulation is defined as, you know, daily and weekly candles looking aggressively bearish. I'm talking about, you know, volume that's so high on the sell side that it almost looks like, you know, this particular asset is literally going to die, and the space as a whole is just going to go bankrupt and everyone will just quit, okay? And I just don't believe that that's kind of happened yet. I think there's still too much, you know, hopium in the space. I still think there's too many players in the market that are being able to make money off of retailers always looking for the lotto tickets. And I think there's way too many, you know, cryptocurrencies out there that have no business essentially staying alive, okay? So once we wipe out, you know, 80 to 90% of those cryptos, once we carve out, you know, nice capitulation where we'll drop even almost 50% from here, which could be almost back into this area right here, you know, anywhere between $1,200 to $1,900, right? Because we fell from 6,500 all the way to 3,100. I mean, that's almost a slash in half, right? So there's no reason why we can't fall another 50% from here into this block right here, anywhere between 1,200 to 900, and then we can't, you know, reverse or accumulate in that area and then keep on moving up. But again, like I said, I'm okay with being wrong. If this is the end of the bear market, we need to stay in this range for an extended period of time and keep creating higher highs, or rather higher lows, and then higher highs. And once we start breaking past, say, 5,000 or 6,000, I would be fully convinced that, you know, we would be putting an end to the bear market of 2018 and 2019, okay? And that's essentially how bottoms are created, guys, okay? Like I've spoken about before, if you look on this weekly chart right here in 2015, on, you know, January 12th, 2015, from there we had a low of 163, right? And we didn't create higher highs till almost October 26, 2015, okay? But you could see that we created these nice higher lows and then we kept on moving up. And this would have been, you know, even a good point of entry, right? This is a confirmed uptrend right here, okay? Even if you bought at $466, compare that to the move to 20,000, I mean, you're golden, right? So that's how I see, the potential of Bitcoin coming down to significant lows and then, being accumulated, and then, we keep on moving up. Okay. So that's why I think, capitulation hasn't happened. I still don't think that we have felt enough pain in the space. Once you basically hear more and more people not giving a shit about crypto or Bitcoin and they hate it, I will probably be convinced that, okay, well, the end of the bear market is essentially near and we might be close to accumulation. Okay. The inverse head and shoulders pattern, again, like I spoke about a little while back, that's essentially been invalidated, right? I mean, yes, there's a possibility that we could break up past $4,100 soon, and that will create like a wonky looking, inverse head and shoulders, kind of like that. But I highly doubt that we're going to create an inverse head and shoulders. We might move sideways a little bit down and then move on up. And, those are really not counted as inverse head and shoulders, but bullish patterns nonetheless, right? So let's see what else we have on here. Let's see. Talked about that. Talked about the, again, Wyckoff accumulation. This is a possibility. This is not exactly, something that I think will happen. It's just a general outline. If things were to be in accumulation phase and Wyckoff was playing out, this is kind of how it would look, okay? So you may even get an opportunity to buy back again at 3,000 if Wyckoff is playing out, okay? And you can see again, we're basically moving sideways in a critical support or demand area. This is not an area that you want to spend too much time in, guys. I wouldn't be surprised if we kind of, broke down again and retested this low that we had about, 2 or 3 days ago. And then, moved up towards 3,600 and then broke down again. Okay. But again, if you want to make sure that the bulls are defending this area, we shouldn't even come back to it. Okay. The way you defend an area is not that you keep, slamming into that same support over and over. Okay, the way you defend the area is once prices come back to a certain level like that, right? They should skyrocket upwards. They should retrace, create a higher low, right? And then keep on, moving up and out. Okay, they should not be coming back to towards the previous lows. That's not how you defend as bulls. Okay. See what we have here. This is another schematic that I had drawn up, and I mentioned this again, in my TradingView analysis. If you guys want to come join our CryptoSomniac community, you can see all of this analysis. I post, almost on a daily basis for our Advantage members. I provide trades, ICO chats, Forex, stock market, etc. Okay. Anyway, getting back to this. So you could see from a 20,000 high, when we went down to about, $6,000, we bounced up to the 382 Fibonacci. And then from the 11.7, we bounced down to 6,400 and then came back towards 10K. Okay. So each of these, subsequent bounces, right, you could see that, none of them actually went past the 618 Fibonacci level. Now, this is actually very true of equity markets too. When you're in a confirmed bear market, what typically happens is, prices keep moving down and then you get this sharp reversal and you keep on moving up and it looks like you've started a bull market, but you retrace, right to that 618 Fibonacci level like this right here, and then you reverse back down. Okay. Now, the reason I'm bringing that up is because, if you look at this bounce, right, from $3,100 right here, right, and our initial fib was drawn from 6,500. So from 6,500 to 3,100, that's the range of our fib. Now, reversal zones for our Fibonacci levels are 382, 50, and 618. 4,400, 4,800, and 5,200 are the correlations of the price. You could see that we barely even made it up to the 382 Fibonacci level. What this essentially says is that Bitcoin as an asset, as a tradable asset, that is, essentially from an economics perspective, a fight between the bulls and the bears, between supply and demand, right, is significantly weak. Okay, the reason why is because you would expect an asset to climb up somewhere between this area and then reverse down if it is, still a bear market. But the fact that we didn't even make it to that zone and we already reversed on like a double top scenario at 4,000 just goes to show how significantly weak, Bitcoin is. Now there's possibilities that we may come down, rip through some of these stops at 3,100, create a W style, bottom like this, and then start our potential bull market. But personally, I think that's highly unlikely. I really don't think that bull markets in Bitcoin are started with W bottoms in small time frames like that. I think they're large accumulation periods because there's so much of supply floating in the hands of people that shouldn't have it. And I don't mean that in a mean way as retailers shouldn't have it, but rather that's how institutions and smart money sees that, okay? When they see too much supply on the market and they don't have control of it, they're not going to move markets up in a direction that's unfavorable for them and, the amount of market share that they have, right? It doesn't make any sense, okay? So for that to happen, I would expect a significant, accumulation period and then potentially a move on up, okay? But if we break past this block of, 3,000 or 2,800, it's going to be really rough and we're going to go back to this little area that I spoke about, which is, we may actually rip right through the $3,000 level and come back to this OB right here, and maybe even cut past that and go all the way down to, $1,500 or $1,600, okay? And it's not going to be pretty, guys. It's going to be, the death of a lot of coins, which to me is a good thing, but a lot of people are going to lose a lot of money. So I want you to be careful in a market like this, okay? Don't go all in. Don't put your retirement savings and your kids' savings and your credit card loans or whatever on crypto, okay? This is a speculative asset, and it should be invested in just as that, a speculative asset. All right, so you're probably wondering what this chart is right here. Each of these vertical lines are the expiration contracts of the Bitcoin futures from CME specifically. Okay, the CBOE are one-to-one contracts, meaning one contract is equal to 1 Bitcoin. CME is a little heavier weight. One contract is 5 Bitcoins, so I decided to pick that. One of the reasons why I decided to kind of map out this is because I fully believe, and again, I have some proof for this because I've made a video on it on YouTube. You can go check out, Bitcoin futures manipulation. I think that's the title of it. So anyway, the point is that, when these futures were started, right? What happened with the subsequent drop in the market was that, people knew that these futures are going to get started. And I think the market being pumped up so high was due to the fact that, the derivatives traders from the CME and the CBOE actually probably helped in pushing up this market to, these astronomical heights. And as soon as it reached these heights, they started selling off into the public FOMO of people buying. Not only that, they actually opened up probably a shit ton of short positions, right? Because the next contract closing was January 26th, okay? So between when the CME futures opened, which is December 17th and January 26th, you could see Bitcoin went from 20,000 all the way to about 10,000. So it basically halved its price, okay? And then what happened? Well, it went down all the way to 6K, right? And then it went up, and this is where they can open long positions, okay? And they probably closed out their contracts here and then went short, and then long, and then short again, and then long and long. But for the most part, I would say overwhelmingly, I think they're far more better positioned to open short positions because they already knew that from the height of 20,000, this market has, a significantly lower floor. Okay, so they're going to keep hammering this thing down until they bring the prices to potentially wherever their institutions are willing to buy and accumulate. And, you know, that might be pretty low, guys. That might be anywhere between, like I said, anywhere between $1,200 to $900 or $1,900. Okay. I'm not saying that that's definitively where prices will go, but I'm saying that, you know, there may be a good reason why prices are stagnating at this level, and we may be, you know, impending for another drop. Okay. Now, one thing I wanted to show you guys is this RSI indicator. Okay, and I specifically want to show you the monthly chart. Okay, so here's the monthly chart, right, on the RSI, if you can see. And you could see that in 2015, okay, we hit a low of almost, you know, 44 points right there, right? And you could see Bitcoin is essentially, oh, we're right there. We're coming right close to that same level right now, okay, in 2019. So 4 years later, you know, we're coming back to the same level. But remember that RSI, the way it works is oversold levels are below 30, overbought levels are above 70, okay? And you could see that we did not go towards oversold levels in 2015. However, we may have a chance to go to oversold levels in 2019, okay? Now, you can see the open air between 44 points on the RSI and 30 or even lower. Okay, that's a lot of open air, guys, and things could get significantly worse for Bitcoin prices if the RSI starts dipping lower and lower, okay? And this is why I say that, you know, on the monthly time frame, I mean, Bitcoin has a lot of room to fall. But once it hits those levels on the monthly time frame, I would be fully convinced, especially if the price is anywhere between 1 and 2,000, that that will potentially be the bottom of the market. Okay, because there's a lot of people from, you know, 3 to 5 years ago who are holding onto their Bitcoin and they won't sell no matter what. So if that's the remaining supply that's in the market, they're not going to sell. So the smart money and the big traders and the whales have essentially accumulated from all the people over the last, you know, 1 to 3 years. But they know that they can't get the other people to sell because they won't sell no matter what, right? So that's how you get the remaining supply out of people's hands. You push prices so low that they are now seeing, you know, their investments at a loss, okay? And, you know, if you bought about 2 or 3 years ago, right, chances are, you know, you might be a little up in the investment, but you're cutting it really close, right, at the $1,000 level, okay? So that's kind of how, you know, you could see the markets playing out, especially if prices were to get crippled, okay? Let's take a look at SPX, see how the stock market's doing. So I'm, you know, based out here in America, and I also provide analysis for our group in terms of Forex and the stock market. And I had mentioned that, you know, $2,600 points on the SPY is going to be a tough area to get through. And you can see on the weekly chart, we're slowly trying to creep up out of the Ichimoku cloud right here. Volume is ticking up, which is definitely a good sign. But remember, like I said, you know, when you have a big drop like that, right, prices tend to rebound back to 618, head back down, take out the stops of all these, you know, people right here who tried to catch the bottom, right? So then you create this sort of, you know, W stop bottom, okay, like that. And this is definitely possible in the stock market, okay, because we're not in a depression or a recession. You know, for the most part, I think the stock market's pretty healthy, definitely far healthier than the crypto and Bitcoin markets, in my opinion. So this kind of correction in the stock market is definitely warranted, right? If we catch a nice, you know, W bottom and take out the stops and then start heading to all-time highs, okay? All right, let's see what we got. And again, you know, this entire chart, I still have the expiration dates, but unfortunately, the stupid government shutdown in the United States is disallowing CFTC and the CME futures to update their data, right? So if you go to the CFTC website, you can see Bitcoin futures right here. This is the CME contract, but the last update was 12/18, right? Anything beyond that, it hasn't been updated. And this is the really shitty part about this, guys, is, trading in the blind against futures is basically asking to get destroyed. Okay, because these people are so savvy, they have so much money, they play with high frequency trading algos that more than likely they will take your money and more. Okay, so this is why I am strictly against big positions in Bitcoin or Ethereum right now, because I have no idea of the structure and positioning of futures. Okay, whether it's SIBO or CME. Right, so be careful in this area. I mean, more than likely they're aiming for some downside right here, and who knows? The contract expires January 25th, 2019. So today we're at January 18th. So we got 7 more days, right? We may have a sizable drop, and that might meet their targets. And again, I mentioned this in the analysis this morning. When you have the futures traders pushing prices down or up, right, to meet their targets, this is called banging the close. Okay, it's a specific terminology that's used in the futures markets to ensure that prices meet the contract expiry targets and the traders make maximum amount of profits. All right, so it sucks and it's really shitty that they do that, but this is the way of the world, guys. If you want an alternative asset, a alternative financial system, this is a price that you have to pay. You have to go through the smartest of the smart, willing to destroy your asset, and you have to come out on top. And if you can't, then Bitcoin will perish, and you'll never hear of it again. But if you do come out on top of it, and people really do believe in this asset, and the world recognizes it, then you will see, Bitcoin and cryptos take off to astronomical heights, even beyond 20,000. Now, again, none of this is investment advice. I'm not telling you to go buy and spend all your money in Bitcoin. I'm just saying that this is how markets operate. Okay. All right. WSR Crypto, what's up, man? I love having you in the community. 4Leaf Crypto and Elizabeth, thank you guys for joining. JK, same here. Thanks for joining. Yeah, guys, we have a really fantastic community. So if you are not part of the Cryptosomniac Moon Lounge, go to cryptosomniac.com and join. I do daily analysis like this for our members. They can vouch for me every single day. Okay, and I do my best to provide them an update every few hours if I see anything wonky in the markets. Okay. So WSR Crypto asks, everyone keeps drawing the BTC triangle from January 10th. Do you use triangles, and what is your take on the current triangle? What is your average breaking point in a triangle, and how is it measured? Oh, that's a fantastic question, actually. So let's go and see what WSR is asking. Okay, so he's saying the triangle from January 10th, right? So January 10th is this area right here. Okay, so I wonder what he's trying to say. Let's see. January 10th is this one right here. I don't quite see a triangle here, but let's see. Let me see if I have it on my smaller time frames, my other charts here. Let's see. Okay. Oh, I see what you're saying. I think I see what you're saying. So you're saying something like this, maybe? Kind of like a symmetrical triangle, like that. If you're saying that, symmetrical triangles again are continuation patterns, right? More than likely, I mean, this, given the fact that for the last few weeks we've been falling to the downside, this will potentially break to the downside, not because the fact that it's a triangle, but because it's a continuation style triangle in an already bearish market. And the way you size this up, right, is you take the height of the triangle, which is the largest, you know, top to bottom. So you could take it like this and like that, okay? And then you make the target kind of like this, okay? So wherever the drop occurs, right, that's where your target will be. So you can see that the target will be right around 33.50 or so. Okay, so that's kind of how you draw a triangle. Same thing with ascending or descending triangles. And also, you know, while we're on the topic, same things happen in the inverse head and shoulders. Okay, so if we are looking at, you know, say inverse head and shoulders, right? So this is your left shoulder right here, right? Kind of like that. Here's the bottom right there. Let's just say it's like that. And let's just say, you know, the right shoulder is some weird thing like this, okay? So the way you measure the target is from the bottom of the head, okay? So the bottom of the head is from here and the top is like that, okay? So you take this and you move this wherever there's a confirm break, right? So say if we're gonna, you know, break today or tomorrow, in the next few days, right? So break of the neckline right there, it's got to be confirmed break, by the way, meaning that the, you know, at least a daily candle needs to close above this neckline. So close at $4,200 on a daily candle is probably a good sign, okay? But if you see a wick like this poking up to the upside, more than likely that's a false breakout, and then you're going to get wrecked on the way down, okay? So this is how you measure inverse head and shoulders targets too. So if we broke up, confirmed a break of the inverse head and shoulders tomorrow, your target would be somewhere around $5,000. And, you know, that's also kind of perfect because I've mentioned before that there's a lot of confluence of Fibonacci levels, as well as I think the 100 moving average or 200 moving average is right around that same area. Well, that's the 200 right there on the daily. Let's see where the 100 is. Oh, that's the 128. Oh yeah, so the 128 is right around the area. I think that's what I was looking for, right? Remember how I explained that, you know, those gold hoops that you guys saw earlier, the 128 is a moving average that's, you know, significantly held Bitcoin down or held it up on the way in the bull run. So you could see a potential move towards 5,100 if this is confirmed. The fact that, you know, we're essentially moving like this in a sideways bear flag because of this, you know, big kind of bearish candle right here from 4,000 all the way down to 3,500. This is definitely not a good sign in my opinion. So, you know, we need to first wait for a close above 3670 or so, right? To give us, you know, a confirmation that, hey, can we close above 3670 on the weekly chart? Because if that's the case, then we can potentially move up towards 4,000. If we can't even close above 3670 or $3,700 on the weekly chart, you know, it's going to be pretty hard to say that we're going to move to the upside. Okay. I think that's pretty much it, guys. I think that's all I have. Yeah, if you have any more questions, please, you know, come join me in the Moon Lodge, guys. You know, I'm pretty much always there. Jordan, our other analyst, he's, I mean, very knowledgeable too. He answers a lot of questions, posts a lot of charts. He actually is a expert in bot trading as well as arbitrage. So you can definitely talk to him about opportunities in that area. He's also pretty experienced in BitMEX and leverage trading on Finex. So you can talk to him about that. But again, be careful while trading, guys. You know, day trading doesn't mean you have to trade every single day. It just means that you need to do your thorough analysis every day and make sure that you get good trades, you know, at least once or twice a week, okay, with the best, you know, risk to reward ratio. All right. Well, that's it for me. You know, come check us out, www.cryptosomniac.com. Come join our free lounge, guys. And if you have any questions, shoot them my way in there. All right. Take care and have a wonderful day. All right. Don't know how to stop the stream. I'm stuck here.